Homeowners right now have more bargaining power than they've had in years when it comes to their mortgage. It comes after major decline in new home loan applications, leaving banks absolutely scrambling.
Banks and lenders are expected to drop their rates to try to win over your money, with tax changes and falling house prices spooking a growing number of Aussies out of the housing market.
And for more, Sally Tyndall, Canstar's Data Insights Director, joins us now live. Good to have you with us. If banks are competing for our business, what should Aussies be looking for? What's a good mortgage rate right now?
Yeah, good question. And let's go with the average for an owner-occupier variable rate, 6.25%. But let's be clear, that's like, meh. We don't want to be average. This should be, your mortgage rate should be a game of limbo. You want to go as low as possible, ideally. So a competitive rate starts with a 5. It does not start with a 6. It does not start with a 7. It starts with a 5. And the lowest on our database, 5.69%. But if you say, oh my gosh, under 6%, not possible. Yes, it is. 51, actually now 52 lenders on the Canstar database are offering at least one variable rate under 6%.
Okay, is that an entry-level, 1 year only rate and then it drops and then it rises?
Such a good question. So these are variable rates that I'm talking about, not fixed. Fixed tend to be a little bit higher at the moment.
Yeah.
Variable rates, they're for owner-occupiers paying down their debt. Some of those loans will require you to have like 40% equity. You own 40% of your home. Some will require you to own just 5%. So there's a variety there. Right. 52 banks or lenders, including one big bank in Westpac.
So obviously dependent on how big your loan is, but if you go from 6.25% at that average rate down to 5.69, how big a difference in terms of payments each month could that make?
It can make a huge difference. So $600,000 debt, 25 years to go on your home loan. I've actually done the math slightly different to what you've just said, but say you get a 0.25 rate cut, right?
Yeah.
You can haggle for that kind of thing. $92 will be the drop in your monthly repayments. $92, I worked it out, well, casual maths, 6 extra juicy big steaks in your grocery basket each month, right? Okay, and then over the next 2 years, you're going to save almost $3,000. And if you can haggle for a half a percentage point off, so 0.5 cut, you're doing double that, $183 back into your monthly budget, almost $6,000 in savings. But if you have had a mortgage for 5 years, right, you took out a loan 5 years ago, and right now you've got $600,000 debt, and you haven't done anything with your mortgage rate since you first took it out, you're actually on a rate, an estimated rate of 6.97%. You're almost at 7%. If you can get down to that under 6% rate, you could potentially save, by refinancing, close to $11,000 in the next 2 years, and that's even after we've factored in over $1,000 in switch costs.
Okay, and look at it. A lot of people don't know what they're paying. So go into your app, go into your bank and ask what your rate is right now. Are there traps in chasing the cheapest offer?
Yeah, okay, so you really want to be making sure that you're getting it right. So go and have a look at what rate you're paying. Go and have a look at what your bank is offering new customers. If you go to refinance, you want to be checking for fees. I mentioned that. Sometimes they're at well over $1,000 in switch costs, but do the maths. See if you're going to be ahead. Know that, like, you've got a discharge fee. That's not negotiable with your existing bank because you're going to say see you later to them. There's some state government fees to transfer over your mortgage. But the upfront fees from your new lender, they are negotiable. You want to make sure that you're switching to a loan that's comparable. So if you want an offset account, make sure you get one, right, for example. But also, if you're trying to save money, if your goal is to pay as little interest to your bank as possible, this is important with refinancing. Make sure you keep your loan term exactly the same, because if, say, you're 5 years into your loan, you've got 25 years to go, you refinance back out to 30 years, you could actually undo all the good work that you have already done.
Interesting.
Yeah, if you're motivated to leave, just give your own bank a call too, because they might come to the party.
Yes.
Absolutely. I did this just the other day, rang up, I said these 2 words, rate review. I would like a rate review. Yeah. She said, I love rate reviews, knocked a little bit off my mortgage rate.
Oh, good.
There you go.
Yeah.
Worth the phone call.
Worth the phone call.